Let's welcome in a special guest, Rupal Bhansali, Chief Investment Officer, Portfolio Manager at Global Equities, Co-Portfolio Manager. Ariel, Global Concentrated, is with us. Thank you so much, ma'am, for taking out time for us. Firstly, wishing you, a very happy Women's Day. And let's start with, what attracted you to the stock markets in the first place, because you've been here for so long.
You could say I was born into it because I grew up in a family of bankers and brokers. My dad owned his own brokerage firm on Dalal Street. And so I really heard him talk to his clients over the phone often. And that's sort of, what piqued my interest. But more importantly, I was born in the 1960s and markets were rip-roaring. And so thankfully, my family business was doing well. And my dad put me in the best schools, in the best clubs. And so I had really had a good lifestyle, when I was sort of very young. And then the 70s came along and the stock markets crashed. And so did our family fortunes. And I would be in school and I would want something and go to my mom at home and say, I want this, I want that. And she would always tell me, sure, you can have it, when we have money. And I was this 9-year-old wondering, what is this mysterious thing called money and why don't we have it? So my entree into the markets and my trying to understand money was because I didn't have it.
Wow, as simple and as complex as it gets, the need for money, right? That all of us are also dealing with. But Rupal, hi, thank you so much for joining us. Anisha this side as well. You are the example from Dalal Street to Wall Street, and you started off at a time when there were not many women fund managers, let alone, the equity advisors, etc. How's been your journey so far, especially from Dalal Street to Wall Street?
Well, first of all, I will tell you, having worked on both streets, my experience at Dalal Street was very instrumental, very formative, and actually extremely useful throughout my career. I'm a big believer that, if you start to work early, you get a head start in any profession. And so that's kind of what I did. I was apprenticing, at various brokerage firms on Dalal Street. And then, when I did my master's program, I went to the US to do my MBA. The reason I wanted to come to the US is because if you're an athlete, you want to compete in the Olympics, and beating the S&P 500 is the Olympian journey of any investor. And so I had already sort of decided I wanted to come to the US and make my mark on Wall Street. I would say I'm fortunate, that I eventually ended up growing through the ranks and reaching the C-suite, which is unusual. And I wish it wasn't, and I wish it wasn't as rare as it has been. But I would say that Wall Street is one of those places where it's really a meritocracy. And I was very fortunate. The people I worked with, again, in India, at all my firms, all my bosses in Dalal Street, in Wall Street, they were very demanding. And I think that's something that, I was very fortunate that they were so demanding because they asked a lot of me. And I would not have known my potential had I not had such tough bosses. And I'm very grateful to them. As I am to my father, because, being a broker, he was a known consensus investor. And I think he sort of shaped and made me what I am today in my upbringing. I grew up to be a very independent person. And I think that also allowed me to make this journey, across, I guess, thousands of miles.
Right. Shifting focus a bit to the market, tell us where your return expectation stands from US, especially this calendar year.
Well, I'm pretty bearish on markets, and that view is premised on the expectations people have are likely to be dashed, both in terms of the earnings expectation for the S&P 500, as well as global stock markets. And as fundamentals go, valuations tend to derate in that direction. If you look at the S&P 500, people expect, the consensus expectation is for the S&P 500 to report about $275 in earnings in about 2 years' time. I think that could well be 200 and going in the wrong direction because we're roughly at 225 today. And I think as that happens, the multiples will also likely derate, which means you're looking at the 4 handle on the S&P 500 today. It could well be in the 2s. I don't think people are prepared for that. And one of the golden principles of investing, and this goes back to what Buffett said, is don't lose money. Investing with a margin of safety is very important. And a lot of people think that, stocks only go up. Well, they can go down a lot too. And I would be very prepared for that eventuality in 2023, notwithstanding the very bullish start we've had to the year.
Well, Rupal, you're sounding fairly bearish, and the levels of around 2,000 thereabouts on S&P sounds a bit scary. But given we all are in the money market, and you're a bit bearish when it comes to equity, especially in US, where are you deploying the incremental capital then?
So I think it's important to understand, it's all about what is being priced into the stock markets. Even if incrementally news is bad, if that bad news is already priced in, you can actually invest in that opportunity here and now. I would actually say that the US and India are two of the most expensive markets in the world, and expectations for growth in both markets is very high. On the contrary, expectations in Europe, the UK, and you mentioned Brazil, Latin America are quite low. And I would say that you're actually being paid for things, to go wrong in those markets, as opposed to the other two markets I referenced, where you're only paid if you're barely paid if things go right. If you look at, the strategy that I would suggest investors adopt in this kind of environment, because again, we all have to be staying invested. We need to compound our capital. And my approach to doing that in this environment is owning dividend yielding stocks. Total returns for the stock market over the last 2 centuries have come as much from dividends as they've come from capital appreciation. In the last decade, we've seen a very different experience, and the recency bias has caused people to think that that's how you make money. Actually, dividends are a very good way to compound capital as well. It is a slow and steady way, not a very heady way, but that is the kind of environment I see ahead. And so try to get safety in dividends. They are actually found in spades in international markets like the UK, like Brazil and Europe, less so again in the more richly valued markets like India and the US. So I would suggest if investors have the opportunity to go abroad, again, not in the conventional way in which people go abroad, which is the US market, but actually a European and the UK stock market, as well as in emerging markets. I like Latin America, although China is offering some opportunity as well.
Shifting focus to Adani Group, do you think Adani Saga will impact investment flows into India?
Yes and no. I think the Adani news story that broke out in the short sellers report certainly took some people by surprise, and certainly, the scale and scope of what is at play here is disconcerting to investors. Having said that, I think a lot of investors are quite sophisticated, and they understand that India is not just Adani. Obviously, again, important as the largest industrialist and allegedly, of course, one of the richest people in the world. But nonetheless, India, I think, is far bigger than any one conglomerate. And I think that's to India's credit. I also think that investors in India tend to favor some of the smaller and mid-cap size companies, as do a lot of Indian investors, and not just sort of zero in on the large cap companies. I think that's one of the blessings of India, that it is such a wide, it's such a broad and diverse market that you can find opportunity in different corners of it. So I would say that, the Adani news story has certainly hurt the image as well as the appetite for certain kinds of industries, and people have become a bit more circumspect. But I don't see a wholesale walking away from India on the back of this news at all.
Okay, not seeing a wholesale walking away from India. That's the positive news. But Rupal, thank you so much for making time and speaking with ET now on this special occasion of Women's Day. But